Give me all you've got if you're prepared to break the silence. I'll be out in the sunshine, running beside the lions. I've been feeling down, but I've been looking.
Hello, welcome back to WINFXTRADING YouTube channel. This is the only channel that has been optimized to make you rich trading the Forex synthetic markets. In today's video, I'm going to show you my #1 BoomCrash indices entry strategy, Untold Facts. Market must be trending, that is making differential swing in H1 time frame. The next item, the time frame should be H1/M1 time frame. Why the H1 time frame is for area of value or area of interest. The M15 time frame is for entry. The W, M, V, and N patterns must be broken in M15 time frame. In this video, I'll be using the notion of wave property of light. I'm going to see price actions, as light particles that have wave property like reflection, refraction, and incidence. Okay, price is moved by human behavior. Human behavior has certain energy content and power content. Just like a light from a source, let's say light from sun, have certain level of energy that it transfers as it moves from one point to another. Light can be reflected, light can be refracted, light can be like have incidence property. Okay, so I'll be using the notion of wave property of light, meaning that we treat price as a particle of light. That is, we use the analogy of wave, optical wave property, like the wave property of light. Okay, so we don't have much time to waste. We are going to dive into the video, but before I continue, maybe you just came across this content via searching on YouTube or Google. Try to, if you really have interest to trade BoomCrash, try to check the description of this video to sign up with a broker that provides BoomCrash. It is called the Reef. Sign up. Let's go to MT5 and start the main job. Okay, this is Crash 1000 index. Whatever I say on Crash 1000 index actually applies to all the Crash family, and whatever I say on 1000 apply to other Boom family. Okay, I will be going to the H1 time frame. I'll be going to the H1 time frame. We are going to use the least soon level. The reason why we are using the least soon level is to see the trend behavior of the market. But once we notice the trend behavior, we can increase it to maybe from least, first, second, to second zone level, so that we can produce the signal. Okay. Most times when you get least zone level, people will think that when price get to the screen, it's change trend. The trend will change. Not always like that. It has a negative statistical edge. That's why you need to monitor how price behave as it approaches the end of the scheme. Okay, so why I'm saying this, when you get the zone level, don't be afraid of what you see here. Price can break this level and still create new levels and break them, and this is not the end of the price. This is not where the earth ends. Okay, so that's what I'm trying to say. So here you can see this market is trending up. Let us also assume that this session of price have not existed. Like this session, this wave have not, this is a wave. I told you should see price as a wave. At lower time frame like M1, M5, you notice that price create patterns like this. it creates pattern like this. Like let's say it's trying to flow, like it's trying to flow along this path. It does not move on a straight line like this. Like it does not move on a straight line like this, taking up values. Rather, it moves like a wave along that path. We will have an imaginary path that is a line of symmetry of that wave, where you can see the amplitude of the wave, the trough, and the peaks. So we have a market that can go like this. Why it want to go up, but it will be going like this. Okay, so this is trough, peak. This is trough. This is peak. This is trough. It's going like a wave. Okay, let's go to M1. You notice what I mean. M5, for instance. What do you see? Why it is going up? Let's use second zoom level. Why it is going to a particular direction? Take for instance, it's going from here to here. It does that via a line of base feed. Let's say draw a line that divide the price action into two equal parts, like this one. Let's try and divide it into two equal parts. What you see in one part is equal to what you see in the other part. Like that is the line of symmetry or equilibrium line. Okay, I might not be perfect in drawing it, but if you know drawing, you can do it. You know how to do engineering drawing, you can do it better. So okay, now you see price go like this and drop, go like this and drop, go like this and drop, go like this and what? Drop. The aim is to reach this point, but it does not reach this point by just creating point like this and then reach there. It reached there in form of a wave. Okay, peak, trough, peak, trough, peak, trough, peak, trough. So we can define price as a wave. Simple. You don't need to doubt it. Yes, you don't need to doubt it. You can approximate this to be a cosine wave by adding some factor on a idealistic cosine wave. Approximate it to be a sine wave by adding some factors in idealistic sine wave. These are not things I'll be explaining or discussing or showing more. No, I'll just be using it in a verbal manner, but you will learn a lot from it. I will also apply it practically. You will see more of it. So let's go into the deep reason why we come here. The deep reason of this video, we are going to hit back to H1 time frame. Okay, so it is assumed that these upper parts have not existed, but these ones have. Now we are going to introduce the notion of mirrors. When light hits on mirror, there are three major properties that you need to consider. Physical property. I'm sorry, four major properties we are going to consider, which I'll be considering the reflection. So let's start it in order. We should be considering the incidence length, the reflection length, and the refraction length. And the fourth will be the angle of those stuff: the angle of incidence, the angle of reflection, the angle of refraction. Okay, so it's a fourth dimensional analysis. Okay, so we can see that price is even more than fourth dimension. Okay, the way you see price today may not be the way you see it tomorrow. So we can add time to make it a fifth dimensional problem. But that is by the way. I don't want to go into those dimensional issues, but I'm going to make sure that the aim of this video is realized. Okay, stay to the end of this video. Don't just watch first 10 minutes, first 5 minutes, first 2 minutes. Don't watch few parts of it and just skip. No, make sure you watch it over and over again to the end. Okay, so let me mark out the area that we are interested. We are interested here. We want to predict this up move. How do we do that? Okay, now you have to study that. You have to make sure that the market is trending. You see, this area was broken. Okay, if you go back to the document, I say that the W, the M, the N, the V patterns, their combinations, like they should be broken for a trend to exist. Okay, so let's identify those structures. Okay, you notice that the price moved from here and drop as a wave. It drop, it creates a peak or a high and drop to a trough or a low and jump up again and drop, jump and drop. Then this is broken. This area was broken. Okay, this area was broken. So this area that is broken become a mirror. Here that contains the low become another mirror also. Price break it and go up and come back to the mirror and go up again and come near it but didn't touch the mirror and push. So I'm going to show you the rationale behind all this movement. Okay, so how do we draw our mirror? That's the most important thing. How do we draw our mirror? Identify the highs and the low first. A high is a low, a low is the lowest point ever in a vicinity that creates a significant length. Okay, that creates a significant length to a high, meaning that length is significant and is the highest, is the highest in that vicinity. So this point here, this point is a low potential created this high with a very big distance that you cannot see it such distance in the vicinity. So we now identify here as what? A low, and we identify here as what? A high. Okay, now we now need to mark our mirror. How do we get our mirror on those lows and highs? Within that vicinity, we need to look for a wick, maximum wick in that vicinity. There is no maximum wick in this vicinity, but I can just model the width of the mirror. The mirror is going to be tiny, so this is a mirror. Okay, and then what is the maximum wick in this vicinity? Now I'm using second zoom level so I can see clearly what I'm doing. Okay, so the wick here is this, the highest wick. So draw it, cover that wick. That's the width of the mirror. This slab is a mirror. Okay, because it will help us to analyze price action as a wave. Okay, see, this is a mirror. Okay, human behavior is in form of a wave. That's why price behave like that. Okay, it's all about mass psychology. So we have two mirrors now, right? We have two mirrors. Okay, now you need to calculate, you need to measure the height of this mirror. The height should be from one center of the mirror to the other center. Just click on the object, you see the center of the object, which is the mirror, and then this is it. So the dimension should be in P. Okay, this is 98 pips. 98 pips. You notice that this is what? Which pattern is this? It goes like this, come like this. This is N structure. It's M. So this N structure was broken. It was broken and the retest was made. Now, how do we know the best way to enter during the, because the structure, that N structure, that M structure, that W structure, those structures have to be broken. So it happened here. But I have two rules. Number one rule is if a significant length of a breakout is less than the height of the range. See, this range, this region band that is a range, this ranging region is where price action is stationary, financially stationary, zero acceleration, zero momentum, zero energy, zero volume. Price is at equilibrium. We only trade when price have lost equilibrium. Okay? Inside this zone. Before I continue, I'm going to explain some wave terminology here. You see, this is an incidence wave, because an incidence wave is a forward wave that start the chain reaction. It hits on a mirror and it will reflect. So this is a reflection wave. Now this is another reflection wave, and at the same time an incidence wave, because it will hit anything that hit a mirror. See, the direction is pointing towards a mirror, then it's an incidence wave point towards the mirror. All incidence wave are impulsive move. All reflection wave are corrective move. You won't understand. The energy content of incidence wave is enormous. That on coming to a mirror, some of the energy are absorbed in that mirror, some are reflected in that mirror. So the incidence wave, the instance wave is equals to the absorbed wave plus the reflected wave plus the refracted wave. Now, absorbed wave are invisible price action that do happen around the mirror, but you cannot see it, but they do happen. You cannot see those candles. There are times that candles, like we see a gap, invisible gap. These are, but that is actually different. Like there are some price action behavior that you will never see. They are being absorbed in a mirror. So the energy content, I don't know why I'm releasing this secret anyway, but I have to. Let me just do it to help the community, but you don't need to take it for granted. You really need to like go extra mile to developing it over time before it will work. Okay, I don't want to talk much. Let's continue. Let's focus on this. Let's focus on this. Okay, now the energy content of the incidence wave is so enormous that it is divided into reflection wave, absorbed wave, and refracted wave or refraction wave. So incidence wave is always equals to absorbed wave plus reflected wave plus refracted wave. What we are trading is the refracted wave. We want to trade that refracted wave because that refracted wave is a new incidence wave, but at a higher level. After it break out of a range, like it's not trending. That is what you want to be trading. Okay. Now there is a criteria to trade it. I'm going to be launching about two criteria, like the two criteria. Once you know the height of this range, okay, once you know the height of this range, okay, now number one criteria is that you must validate these criteria are used to validate whether a breakout is fake one or real one. We're only trading the real breakout. Yes, we don't trade the fake breakout. Okay, so the height of this range was around 98 pips. Okay, let's take it to be 98 pip. It was, I think I measured it before, it was 98 pip. Now, during breaking, remember to locate the center of the mirror of interest. This is our area of interest. Yes, in the past, the market has been making higher high. You're supposed to know it break some levels here. Okay, it break here also. You can mark it with a line. So before I start analysis, I already know that it is trending. You can see it's trending. Okay, so now my mirror of interest is this mirror. This is my mirror of interest. Now I have gotten my height to be 198. So the first criteria of entry is from the center of this mirror, the breakout, that break, because we are trading after breakout has happened. That is loss of equilibrium. We don't trade inside the range. That is, the market is at equilibrium and it is stationary. To have series of like the properties, those force-driven property of market like momentum, energy, volume, all of them are zero. They are dead. It is called dead zone. Okay, dead state. So here, when the breakout happen, what you are measuring now is displacement, distances. You are trying to measure the distance the breakout can attain. The distance the breakout attain will determine your entry. Is a function of your entry is a function of distance the breakout create. That is, your entry is a function of the refraction over a mirror, because that breakout is a refraction over the mirror. Okay, so the first attempt, because a breakout have to happen and then a retracement have to occur. That retracement is reflection. Okay, so we'll be using the notion of saturation. This wave have to refract and make an incident here, and then it saturates. It have to refract, it have to cross this mirror, pass through it, and then come here and saturate and drop. Now, as it's dropping, you'll be happy. As it's dropping, I'm going to enter for buy. I'm going to buy cash 1,000. That is not the criteria. So I'm going to specify the criteria. First of all, measure the width of the breakout from the center of the mirror from which it break, so to the saturation level or the new mirror it created. This is 41. Okay, this is approximately 42. Okay, this is approximately 42. So what is the midpoint of the range? What is the midpoint of the range? The equilibrium range, the previous range that we are waiting to break. What is the length? The length is 98. What is the 98. Then what is the midpoint? What's the half of this length? We want to know the half wave effect of this length. The half of it is what? 98 divided by 2. That is 49. Okay, yeah, 49. Now if you compare 49 and 41, what do you notice? They are not the same. Okay, there is a difference between the two numbers. So the half wave and the refracted wave, that like their magnitude, their displacement, the half wave displacement and the refraction displacement, they have a difference. But this difference should not be it should not be greater than 10% of the overall range distance. Okay, we are using 10% rule. So what is the 10% of 98? It's 9.8. So what's the difference between 41 and 42 and the 49? It's 7. So it's within the limit of accuracy. Now, a differential wave of this nature, whereby the half wave of the range and the refraction is obeying because this criteria is now the half wave criteria, whereby the refraction is obeying the half wave criteria. You must accept this thing to happen, whether you like it or not. It must definitely happen. The price during reflection, I say the price during reflection or during retracement back to the mirror that created the breakout is in such a way that it will destroy that mirror. Some energy will be absorbed inside the mirror. That's where you see price. I see price no longer moving, the price is down, everything is slow. You'll be angry, like you won't even believe that it will soon pick up and pump. And what I'm saying, the mirror have to be broken, because you are using the half wave criteria. The mirror must be broken. So you see what happened, it was broken, and expect price action to behave, to expect candles to create below the mirror. Then expect liquidity grab to be to create or to happen below the mirror. A liquidity grab is when price creates certain extreme point to the extent that they couldn't return to that point again, and then price starts refracting or moving away, like moving in person, like moving with certain incidence energy, start incidencing or impulsing, without coming back to there. So that become a liquidity. That is where you are going to place your stop loss. Below it, you are placing your stop loss. You are buying, you are placing your stop loss below here. You are buying, then you are placing your stop loss below this liquidity. But before you are going to buy, there must be a break of structure. I say, what are structures? Structures are those shape. 𝑚, �w, 𝑽, 𝑉, their combination, blah, 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 that are all structural elements. Now, you have to identify this structure. In the H1 time frame, I'm seeing a structure here. You notice the price creates this move down. I'm going to show you clearly. No matter how small it is, every structure is significant. That is this move up here and move down here. That's what price is doing, move up here, move down here. So there is M structure here that was broken. Okay, are you seeing it? M structure was broken. As immediately it is broken, like if you are waiting for a candle to open and close above it, like this one open and close above it, you are buying, remember. So you are going to enter for buy here, place your stop loss below here. We are risking 40 pip to target infinity. Like we are going to target up to 2 mirrors, at least 2 mirrors. Yes, that means you are going to be watching the price. It will be creating ranges and breaking ranges. Simple. When you get at least 2 mirrors that has been violated, you can be taking your profit. The profit criteria is based on mirrors. You can take it 2 mirrors, 3 mirrors, 4 mirrors, but you have to, as the market go in your favor, you can try your stop loss. Let's say I will show you as I progress. You can notice that this is where you're supposed to buy, right? Now the market came here and created a mirror. There is a mirror here. Okay, there is a mirror here because there is a definite retracement, and the mirror was broken. The mirror gained saturation, gained the rest here. So when you buy here, when you buy somewhere here, you will be monitoring how price will behave inside this mirror. Yes, once a candle close below this range, like that, I will be calling it binary mirrors, like that. Two mirror, we use two mirror to do this thing. So when price close below here, you are buying, right? When price close below here, when a candle just close below here, whether it is partially closing or completely, like whether it's partial, is like when candle creates below here, there are two ways it will form. It will be a partial creation, like it open and close below here, or one part of it closes here, like it closes, we are looking at the closing price, then it means the price might be reversing. So you should take some profit and maybe trail your stop. Maybe you can trail your stop in some lower time frame. You look for some swings. Definitely you'll be trailing your stop loss near a swing low because you bought, isn't it? Yes, believing that price will not come to those lows. I will not be going deep into that because this video will take time, so I have to be fast. You know, this is educational purpose. You need to be practical for things to happen, okay? So but if a candle open and close above this range, whether partially or fully, like it open and close above, or at least it close above, then it is going up. It's going up, okay? What you need to do is to add more position and place your stop loss below the mirror, like below the mirror binary system. That is below the two mirror. Two means binary here. So are you getting? You place it, you enter, you place it. You can remember we are getting our entering lower time frame anyway. So let me go to lower time frame. Let me use lower time frame because in that case you can get some good risk reward ratio, or you will also see hidden structures that you need to tackle. So you can see this is it in M15 time frame, and this mirror has been violated and the retest was made. Okay, the retest was made. What is the height of the mirror? You need to calculate the height of the mirror. So this is the height. The height is so small. Let's get the center. Okay, let's get the center so I will calculate the height. So you notice the height. I'm going to show you one thing, one mathematical guide here about the height, the nature of the height. It might be necessary here. Okay, so you see this height is so small compared to previous height we saw. Now because the height is small, the smaller the height of a range, the stronger the, like when the range had a small height, expect a very big impulsive move, a very big incidence move, like of a big energy, big length, big distance, like everything will be so extreme and maximum. So in this case, see the price have actually breaking by this height, right? So we wait for a retest. Don't expect this retest to interact inside this mirror or just below this mirror. It will just, if it managed to touch the one of the surface, then a mirror have a thickness. See the thickness from here to here is the thickness. So it doesn't need to react inside the thickness. Maybe just touch the surface, boom, it's going up, right? So you cannot place your stop loss below inside this space, but then you can place it at the middle of the lower mirror or on the surface, because price can never go there. You won't understand. This is very metaphysical method of trading. So you are entering after a structure has been broken. You are entering after a structure has been broken, which is, there is a structure that was broken here. This is a structure. Yeah, this could be, I'm going to make it realistic here. Okay, we see price, it go up, calm down, go up, calm down, and then break. So you'll be entering here, at this break of structure when I come to close above, and then placing your stop loss somewhere. You are risky. You see your risk reduces to 33 pip. So you are risking 33 pip, and you are targeting infinite. Like you cannot go to higher time frame and see where you are targeting. At higher time frame H1, you notice you'll be targeting something big, like you target towards the end of the screen. Okay, or you target 2 times or 1.5 times the previous impulsive move. The previous impulsive move was this, so you can target 139, then you can target 1.5 times 139. Let's go to calculator. I want to make this thing. Okay, you see, once I go to calculator, you see we are targeting over 200 pips, and what we get here is more than. See, we are entering somewhere here. Remember, we are entering somewhere here. Yeah, somewhere here. See, over close to more than 260 pips. See, that's cool. Yeah, this is so powerful, but one thing, maybe I just want to open your eye. This is not you, it's me. I'm the owner of this. I can do it perfectly, you may not do it perfectly. You may not have time to actually be doing this. You have to join our VIP. This is done for you services. You copy our trade in real time. Join our VIP signal channels. Copy our trade in real time and succeed. The essence of joining is because you might be on a flight, you might be in a ship, you might be in a car, you might be sleeping, you don't have that energy, you don't have that brain work, We do it for you. You make money. It's our duty to make you succeed. It's your duty to take the success. All you need to do is to subscribe. Some people will say, I don't have money to subscribe. You are procrastinating. Why you are broke today is because you didn't plan yesterday. You didn't take risk yesterday. Some people that are at the age of 30, that are broke, that are poor, is because they didn't take risk at the age of 25. They didn't take risk 5 years ago. Stop procrastinating. Act quick. We have limited time to live on this earth. Okay? If you die poor, you are the cause. You are the cause of your poverty. One thing is to see opportunity, the other thing is to grab it. WINFXTRADING is the only company in the whole world that can give you the true signal. I'm telling you, if you want to doubt it, try other signal services. You will still come back to us. Okay? It's costly. Anything that is valuable have to be costly. Borrow money from bank, borrow money from your friends. Do it, succeed, make this money once. Okay? So that's good. Let's go to Boom 1000. Whatever I say on Boom 1000 will apply on other Boom family. So I think I'll back there. So we continue. Okay, this is Boom 1000. This is H1. This is a decent level. The market is actually making lower lows. But currently now it's making higher highs. No longer making lower lows. It's not making higher highs. So maybe let me do as if I want to produce a signal, because one thing in signal production, you have to wait for the signal to happen. You have to wait for it to come to you. You don't need to rush it. But let me work on this current part. I'm going to work on this part. I'm going to work based on this part. Okay, we notice a market that creates this high and do what? Break it. This is a high, it creates this high. You see, a human being that is a trader must have a wave characteristic. You have to behave like a wave. You yourself. You don't need to behave it in a physical manner, like you are walking on the road and you are behaving like a wave and people are not. No, your mindset will be like a wave. If I'm going to, life is all about science. Yes. Don't be religious here. I'm going to scientifically open your eye. In advanced electrical engineering, let's say the same wave idea, like in advanced wave analysis. Okay. If you want to get a maximum power output from an input to a system, like let's say the power content of a wave, that like an input wave to a structure, like to a system. This system now will be like a wave. The system there is just like a mill. Now, an input power, the input wave power to a system will only produce maximum output power, like maximum output power when the resistance or the impedance of the input system is equal to the output, is equals to the receiving structure. The receiving system. When you want to input something will receive it, and when you want to output something will also receive it. Like the thing is, let's assume that this is This is a receiver. This is this is an input system. This input system we generate and output, like it will generate and transmit an input wave power that will come to this receiver. This receiver will produce it, we process it, and produce an output. Now, what we are saying, for we to get a maximum output, okay, the impedance of the input wave device, like the impedance, like the resistance or the impedance of the input wave device, should be equals to the impedance of the receiving wave device that will give out that output. Like I'm a device, I'm a device, I'm producing an audio wave of a given power and strength. If somebody is somewhere the probability that another person will be able to hear my audio very well, like the probability that that person will hear it with maximum intensity, with maximum decibel, with maximum like that, for the person to hear me very, very well, very, very loud, okay, the person have to match my own impedance that is producing the sound. Now, what is this impedance? What is impedance? Okay, what is impedance? What is resistance? Now, you have to understand the notion of impedance, resistance. Just free your mind from normal resistance and support, Now, with this thing, we are talking about mind. We are talking about metaphysical things here. Now, when we talk about the impedance or the resistance, is the forces in a system that make that system not to achieve a goal. Okay? Yes, like the forces that reduces that is like a friction. It's like an opposing force. It's like an opposition. Is about cause and effect. Like is an opposition that will prevent something from happening, but that thing will still happen, but it is there. It's just like an enemy. Impedance is like an enemy, but they are solving problem. They are like, the way I will explain it is, let me now bring it to the financial markets. It's necessary. Okay, when we say impedance, just like in electrical engineering, for instance, or in maybe wave analysis, like optical wave analysis, like light wave analysis, when we say impedance, since electrical energy is also a wave, like we have electromagnetic waves that are produced by electrical currents. Electrical currents produce electromagnetic wave, right? Now, what I'm trying to say is, if when we say the impedance, if a wave is moving, it normally, like if a wave is in a motion, the efficiency suddenly reduce. We expect the efficiency to be at least 100 or more than 100%. But most time, when systems have been designed and you want to analyze the efficiency, like efficiency means, if I give you an input, how far can you give me an output that is either equal to the input or greater than the input? That is efficiency. Okay, so most time, some systems are designed, we give them inputs, the outputs they give are far away from 100%. These are caused by impedances or resistances. Okay, so impedance and resistance is tendency of a device, tendency of a system not to have an efficiency more than 100% or equal to 100%. Okay. Now, but they are solving problem. Okay. I don't want this video to take much time, but you will learn a lesson from here. They are solving problem. Okay. They are solving problem. What problem are they solving? Every man need an impedance. Like I was using myself as an example. If I speak, if I create a voice, for another person to hear that voice, that person must, like, for the person to hear that voice at maximum or with 100% efficiency or more than, the person must match my impedance. Meaning that the characteristic impedance internal with me, inside my ear, the impedance, it's not my ear, I'm sorry, the impedance of my mouth, my vocals, everything that's creating the sound must match his own ear. Yes, must match his. This is going metaphysical, so let's forget about it, but let's start bring impedance inside the financial market. What is the impedance? Now, when you look at price moving and it is on impulse, okay, it is on impulse. Every incident wave is an impulsive wave, and I used to repeat this, and every reflection wave is corrective wave. Every refraction wave is impulsive wave. Every incident wave is impulsive wave, and only the reflection is corrective wave. Okay, now we'll be using the notion of impedance on the incidence or refraction or impulsive wave, because they are the inputs. We are trading in the direction of trend, so they become the input. Okay, now most time, where is this input going? The inputs are going inside the mirrors. Are you getting me? Now most time, when you look at those inputs, we expect a big output, right? And that output will be absorbed, like we interact with another mirror. That output will go and reside with another mirror. Now, most times you discover that it's not able to reach your expectation. Okay, as we see it in the previous analysis, whereby the breakout height or the length or distance is far less than the previous range creating it or forming it is is less than. So we have to find a way to enter using the half wave theory. Okay, so such a scenario means there is an impedance in the input system, in the incidence wave. It means there is loss of efficiency, meaning that there is impedance mismatching. Okay, so this is an incidence wave. Okay, for maximum output, for maximum power output, or for maximum wave power output, that means we need a greater distance, larger number of pips to be cut. We expect the impedance of this incidence wave you see here to be equal to the receiving mirror. So the incidence, this mirror, the impedance of this yard, the impedance is not inside that wave, it's inside the mirror that we absorb it. So if impedances are measured in ohms, when it comes to electrical. So I don't know, let's use those, because we are using those things as analogy. So if this one is 2 ohms and this one is 2 ohms, they have the same impedance. So we expect this to receive maximum power that is coming from this mirror. In other words, it will receive maximum power to the extent that power will break. That means that is when we see break of structure, break of level. Okay, but there is no defined way of calculating those impedances. I'm not going to calculate it, but we can visualize it based on price action. Now, price is still creating, so we are following it. We don't know how it will end. The thing is, if you check here, this incidence wave come here and react on this mirror and do what? Reflect and then saturate. So we are not going to the mention. I have at least gisted you about the idea of impedance matching and all of that. the impedance have to be equal for the maximum output to happen. Okay, so now each mirror have characteristic impedance. Okay, every mirror have impedance. So this mirror and this mirror are communicating. This one, this is our impedance. There are millions of mirrors in a financial market. There are thousands of them. So there is a mirror here, okay, there is a mirror here. Until you understand that human behavior is like a wave, you won't go far. You have to understand it for you to go far in the financial world. Okay, so this mirror create an incidence wave that saturates on this mirror. A reflection happen. You can see that this reflection is very huge. There is a deep reflection compared to other reflection that you might see. Reflection has to do with correction. So when you see this deep correction or reflection, you know, it will not create another incident to a wave, because the correction have to be definite, it have to be obvious, it have to be significant. So it creates this wave. Already we have drawn this mirror, waiting to see how the incidence wave will react. So we expect the incidence wave to break this structure if at all we are going to see uptrend happening in this market. Okay, an uptrend market, because we are looking for buy, you have to define what you are looking for. We are looking for buy. Uptrend market make higher highs and lower lows. Higher highs and higher lows. Okay, so because this mirror is higher than this mirror, there is no new lower low created. What we are seeing is higher low. So it's a sign of uptrend ensuing or coming inside this market. So we expect this incidence wave, this one we are seeing that is moving up, to break this mirror, and it did, but it have a lot of issue breaking it. The way it break it is having issue breaking it. Imagine it break it and price have to come back. Okay, meaning that the impedance here and the impedance here are not the same. If they are the same, you should have created a very big distance in which the length of this distance is either equal to this range, this previous range, creating it, or greater than it. That is a full wave criteria. I will show you a scenario where a full wave criteria happen and the entry strategy. Okay, I will show you maybe towards the end of this video. So there is no impedance matching here, because I don't see the reason why this market will break and still come back below this mirror. Whenever price action break a mirror upward, let's say in uptrend, it break a mirror and comes against that mirror, like leave aside come in a way that it is, is losing power, it's not trying to break, it's trying to fake out, then there is no impedance matching. Do you see how you can visualize whether there is impedance matching or not? What will determine if there is impedance matching or not is if price starts this, if the breakout is trying to fake out, the breakout, instead of breaking straight, it's trying to delay and still disrespect and still come inside the range bounded by two mirror or binary mirrors, then the impedance of those two mirrors is what? Mismatched. They are not matching. But whereby it break and it keep shooting, creating bigger distance to the extent that distance is equal to the range created it, the previous range creating it, or greater than it, there is impedance matching. When there is impedance matching, you expect to ride the market for a long time. I'm telling you the truth. Expect to do that. Expect to make money. Expect to make huge money. Okay, so that is it. Okay, so right now, because of this, I will be doubting this trade for now because of this thing that is happening here. There is no impedance matching. So if I'm to take a trade, I will wait for this mirror to be broken. Yes, if this instance, because this is another instance wave or refraction, because it caused the mirror, it's a refraction. If it have enough energy to break this mirror, break it, and the range of the break, the height of the breaking is equal or greater than this height, that is around around 39 pips, then and there is no mismatching of impedance. Okay, there is no, after that breaking, price is not coming back to enter inside this range, inside this zone. I'm going to believe that this thing is going to push higher. I'm going to buy on a retest here. After some, go to M15, look for structure, change of break of structure, you know, M structure, N structure, V structure, 𝒓𝒂𝒑𝒉, and all of that. I will enter, I will place my stop loss below this mirror. Definitely I will make it. But if that is a full, we use full wave criteria on a matched impedance, when impedance of two mirrors are matched. But half wave criteria is used when they are not matched, like here. Assuming you want to enter here, at least there is a higher high, it's showing a sign of going up. If you want to enter here, then you have to look for area of liquidity based on half wave theory. Look for area of liquidity, because the maximum height, the maximum previous range, the height of the previous range, like the breakout length is either half of the previous range or less than. So you wait for liquidity to create below this, inside this range, and then you place your stop loss there, and then you buy. And it did happen. You see, this is a fundamental idea that is hidden. That's why I say it's Untold fact. Anyway, I'll be ending this video. Maybe some things are confusing, some things are not understood. That is why you need to follow the boss. You need to follow the people that see. You cannot do it alone. Leverage the effort of experts. Subscribe to our VIP signal channels to change your life. Join our VIP courses, premium courses. We have different type of courses. Check the website. You will see the link to the website. Enroll for anyone you like. Change your life. See, buying Bitcoin, buying cryptos, buying gold, and all of that is not enough to make you successful in life. You need to go extra mile to do other things. And what it is like, just trading Forex alone is not enough. You can trade Forex, yes, you'll be rich, but you need to go extra mile to invest in real estate. You need to go extra mile to become an affiliate marketer. I have affiliate product that you can market that can make you over millions of dollars in a month if you are an influential person. I don't need to talk too much, but if, assuming you are like Ronaldo like this, maybe you have follower base like Ronaldo, and people know you much, and you really want to leverage that to make money, you can come to me. I'll give you a product you market. You become a multi-millionaire in space of a month. So you see, we are living in a world that without money you can't go far. You can't go far. You are broke today because you are always thinking about, I'm going to do it, but not now. I'm going to do it. You're always procrastinating. That's why you are broke. Fuck procrastination. Borrow money and join our VIP. We have the idol, we have everything it takes to make you rich. I'm not begging anybody to join, but you see, we are trying to help the community. Okay? We are not begging people to join, but we know you are broke. You are losing it. That's why we create a content, and we also devise a way to make you successful. Like, if you don't want to trade, become an affiliate marketer in our company, and like, I have a product you can sell. It is still signals. You sell my course, you sell my signal, and you make money every time. Okay? But if you want to do everything, you buy the course, you join our VIP, you become an affiliate, but then you are close to becoming a billionaire. Okay? I know this video most people may not have access to this video because maybe it's not a sponsored video and all of that, or maybe YouTube may not recommend it because it's going to put many brokers to hunger, to hunger. Because if everybody, like all the Forex trader, will become my VIP member, like they will be under me, and I will supply the signal, you will discover that all brokers will lose money. Like some broker will go broke. They will no longer be brokers, rather they will be broke. Are you getting me? That's why you see, there is a way a life is. Opportunity will exist. We like few people will have access to opportunity. YouTube will not allow video that makes sense. If that video really makes sense, YouTube, like if that video will fight a big organization, YouTube will not recommend that video because they're afraid. They're afraid to recommend it. Okay, so you have to. You that is having access to it, then take action. Thank you. Bye for now.
If you're prepared to break the silence,